working with the association, and we have a kind of a lineup of events, throughout the year, and really excited to bring some real value-added sessions to the association. When we met with Bill, Jama, and we were talking about topics, and he said, obviously, the number one thing that we hear is succession planning. We have a lot of companies with aging baby boomers, and for a variety of reasons are in a transition. Do I transition to family? Do I sell the business? So many questions, and this is the biggest decision obviously you will make in your life, and sometimes you only got one shot at it. And so what we really want to talk about today is some of the from a kind of a macro level, what we think is some options for you to consider. No, this session isn't around the top 5 steps to succession planning or 10 steps. There is been doing this for 25 years. There is no off-the-shelf real one solution, one size fits all. And so really today is about some initiatives that we want you to take to start this process of planning. First, I just wanted to, again, a little bit about for those that are not aware of UHY, we are a middle market firm really focused on, our largest practice area is manufacturing, and really focused on family owned and some private equity owned businesses in really nationally, but we have a tremendous presence here in Southeast Michigan with our most recent office in Ann Arbor, right in your backyard. So next I want to, again, introduce the presenters. Myself, Thomas Alongi. I am Managing Director. I lead our National Manufacturing Practice Group. I'll be talking really around succession planning to the family. Next, I want to welcome Dan Bruce. Dan is a Senior Manager in Strategy Consulting. Dan's going to really bring a real strong perspective on, you may be saying, what does strategy have to do with this? Well, in order for succession planning to be really effective, is you got to know where you are, know your market, know your competitors, and that this strategy, setting the strategy, helps with longevity and transitioning, whether it's to sell or to a family. And really excited to have Ben Hartman. Ben's the Vice President of our Corporate Finance team. Ben has worked on dozens and dozens of sell-side opportunities with family-owned businesses in manufacturing space, and he's going to give you a real perspective on, is this really the right time to sell? We'll go through that a little bit. So what are some of the, what we'll call the $1 million, or we'll even call it the multi-million-dollar questions, right? That this isn't all of them, but these are, some of the ones that we really come across, a lot. And, it is, sit down with so many family members. I think of just in the last 3 years of, transitioning and selling 11 of my clients. And, this is the biggest thing, it's the biggest decision of your life. And, what is the best path forward? And this takes time. This is not something that's a 2-month, 3-month process. It could be years. And so, how do we go about that process of transitioning to family or employees for that matter? So Dan is going to, how do I spend the, maybe the business isn't quite ready, or maybe you feel it still has runway to grow. And how do I maximize value? And we see this so often with, smaller or middle market businesses that don't have they know it in their head where their strategy is, but what is really, how can we help define that strategy on paper and maximize value? It's so critical, and Dan will just answer that question. And Ben is, this is the #1 hottest topic today, right? Why many of you are online. Is this the right time to exit? I mean, there's so much going on, right? We have, baby boomers, reaching retirement age. We have, global competition that has just really taken hold over the last 5-10 years, and it's squeezing a lot of smaller middle market companies. And so, what are those best options? Because, you also have industry 4.0 technology. It's not no longer just investment in hard assets, and it's in soft assets. So that's, happening. And hey, let's not forget what we just been through, a pandemic. And that has changed the views of many business owners, understandably, of, taking a real hard look of where they want to go and what they want to do. And let's throw in taxes. Let's be honest. We have an administration that is potentially going to, double the capital gains tax. And that could have a dramatic impact on the deal market. Now, we don't have all the details on that. And I know a lot of individual, companies are, racing to kind of, get in, the deal done before the year end. But I always say, don't always let the tail wag the dog. We need to take a hard look to, make sure that we're maximizing value. So when we think about it, so what are some of the solutions? Well, what I can tell you again is there is no silver bullet. There is no one solution that fits all. There is no 5-step plan that fits. So we have to, what we're going to walk you through is a little bit of a higher level of an approach to get you ready to address these questions. And, ultimately, it's when we sit down with business owners, it is, it's the fear of unknown, right? It's a fear of, you've been in control of your business and losing control. And do I have the right team behind me? Fear of, will I have enough money to live on? And quite frankly, the fear of spending money on professionals and not getting a return. And, we don't want that to happen. And so what we do see so often with many, clients is, we meet with initially is that, this is what they want to do. They want to put their head in the sand, right? They want to, and this is what happens when succession planning goes wrong, is you wait too long. And when that day comes, maybe you're not ready, your team's not ready, and, it doesn't go well. And so what can we do to help, put you in the right frame of mind? So I'm kind of a football fan. And so what I'm going to walk you through is kind of your business, an analogy with football, with a team, and it's not that remarkably different. So let's walk through and talk about the playing field, right? And what I call the playing field is really, do you have a strong strategy of where you're going? And Dan is going to talk about, this is the foundation of, to me, successful succession planning is, does the business still have, runway to carry on? And so this is critically important to determine your competitors, right? Who are you playing against? What's the playing field? It's changing, especially in electrification. It's scary. There's going to be winners, there's going to be losers, there's lots of risk. But how can we navigate through that and alleviate some of that pain, right, that you may be experiencing? So if there's one slide and one takeaway that you have today, it's this one. And you may be thinking, what the heck is he talking about? Well, a successful team coach, you, the business owner, needs to have the right coaching staff. Not only the internal team, but who is your external team that's guiding your business, right? Do you have the right attorney that's a business attorney, not just one that's completing contracts, right? Do you have a CPA that is more of a business advisor than someone that's keeping track of the numbers, right? These are critical of the type of team that you want to build. Do you want to build a Detroit Lions coaching staff or a New England Patriots or Tampa Bay? You want to build a championship team or a mediocre team? This is where, this is critical to really think about this team. And you may have an outside party, an industry expert, a banker, and sure, I've seen them, and you know what? You might even need a psychiatrist. I've been through some family, and there's a lot of psychology going on. So that's critical. I apologize. One thing I forgot to mention is that if you have questions, to the right is a questions toolbar. Please, submit any questions that you may have, and we will answer them as we go through. I apologize, forgot to mention that at the beginning. So once we have this coaching team, what are they going to help you do, right? Is kind of build that playbook. And as you know, in sports, there is no one best. You might have to throw that playbook out. You might have to call an audible. No different in business. Things will change. And you have to be able to have the right coaching to be able to change as the business changes, as the coach changes. And so, but you will build out this playbook that matches your business and your family and what your goals. So, and that's why I think it's very critical when you look at what's the number one thing you got to do is you got to build that right coaching team. So, right, you got to pick the winning team. Just like in sports, right? I've seen this where businesses have grown, they've outgrown some of their employees, right? And you have to make change. You have to hold the team accountable. And this is where the coaching team will hopefully back you up on your decisions. And it's not easy. I mean, in a very tight labor market, this is one of the reasons a lot of even middle market companies are looking to transition out. It's very, very difficult, but you want to build that winning team internally, and that takes time. And ultimately, what do you want to leave as your legacy, right? How do you make that business sustainable? It's all you. It's the coach. It really comes down to how much of a leader you are, and what kind of legacy you want to leave behind. And starting this process sooner rather than later is critical. And I know it's difficult. It is extremely difficult. And sometimes it just takes time. I think of some of the cases, clients that I've worked with, and I had one that had 2 sons involved, and we met and we just couldn't get the business. The sons just weren't super engaged, right? So what do we have to do? We actually had to call an audible. We kind of did a mini market. We went to market for the business, and they woke up real quick and said, wait, don't sell this business. We want to be engaged. We want to get, well, okay. And the business doubled over the last 5 years. It's really tremendous. And sometimes you got to call, make a change. And so it's critical. So what are some of the key takeaways here is, again, we talk about spend the time to build. It's not a formal board of directors. It's just an advisory board. And you should meet at least 3 to 4 times a year to make sure that you are keeping on track with your plan and holding you accountable, because you're so busy as an owner. So who's on that board? Again, a banker, attorney. This advisory team will help you to design your playbook, and we think it's very, very critical. So here's the toughest part. You got to be in the right frame of mind, and your coaching staff may not tell you everything you want to hear, and you got to prepare to tackle the tough questions. So we see this all the time. You got to be realistic about company valuation when transitioning to family. Many think their business is worth X, but it's really worth Y. It's got to be able to cash flow from a family perspective, may not have all the liquidity, that you're looking for. And that's one of the reasons that you may look to, right, transition or look to sell the business versus transition to a family. And so that's a very, very difficult, decision. So, and, I know it's difficult, but you have to be open-minded to difficult conversations and maybe not hearing what you want to hear. I can think of a situation where I had, a business owner that, has worked in the business 35 plus years, has never taken more than a week vacation, kind of sees the, light at the end of the tunnel. And I, mentioned that, what, you need to go away for 3 weeks. He goes, I've never gone. I can't do that. There's no way. The business won't. I said, you just need to go away. And, and during that 3 weeks, he found out who stepped up, who didn't. It changed his, his program with his team. And today he's able to take a month off, and we're well on our way to fully transitioning to, in this case, an ESOP, employee stock ownership plan. So there's lots of options, but you got to have the difficult conversations. And as I said, those key roles and responsibility, you gotta define them, and you gotta let your team roll with that responsibility. And just like in football, right? You got to hold your team accountable. If team's not winning, you got to make change, right? So, and ultimately, you have to consider, are you really prepared to transfer control? So that is the number one. Sometimes you say you are, but you're really not. You have to really take a deep look for that. You got to take a leap of faith, right? You got to take a leap of faith that, the business will be able to survive, for another generation with your family. So next up, I want to introduce, again, Dan Bruce. And Dan is really going to, again, talk about this million or multi-million-dollar question of how do I, spend the next several years kind of growing the business, and why is strategy so important to that? So Dan, I'm going to turn it over to you.
Great. Thank you, Tom. And thank you, everybody, for attending today. As Tom said, I'm Dan Bruce. I'm a senior manager in UHY Consulting's Transformation Solutions practice, and I have expertise in strategy consulting and commercial due diligence. So how does that apply to today's conversation? Well, in the strategy consulting side, I work with companies to help develop a strategy for growth. And on the commercial due diligence side, I work with companies who are looking to acquire another company to say, hey, is this target we're acquiring, can they hit the growth projections that they're saying? What's happening in their market? What's happening with the competitors? So if we look at both of those and we bring my perspectives in of, hey, I'm a company that's looking to sell in the future, I have a lot of expertise and perspective that I can help provide. So the first thing to talk about is, all right, what are potential strategies? And to kind of frame this as well, this is maybe you're thinking about selling and maybe it's down the road. So what are things that we can do to help increase the value of the company before that sale process? And so these are some of the strategies. It's not an all-inclusive list, but some of the strategies that you can implement. So a market strategy. You could look at maybe entering a new market. Maybe you're a metal former that today serves the aerospace market, but then maybe you want to get into automotive or medical, something very different. There's also product strategies. So you could innovate one of your products. Maybe back to the metal forming example, you start using a different material, like an advanced high-strength steel instead of what you're currently using to innovate the product you're working with. There's operational strategies. So here, maybe you find ways to make your process more efficient. And that way you can reduce costs and help increase your profitability. M&A. So it's possible, even though you're thinking of selling, maybe there's an acquisition that you can make now that's going to improve the value of your company when you go to sell, to kind of buy scale and improve your market position. Divestiture. So there may be a portion of your business you could sell, and that's going to improve the overall profitability and the value of the company. And maybe there's a partnership that you can make to help increase scale or improve your market position. So all of these are kind of a summary of potential strategies that you could take. All right, next. So what are buyers typically looking for? As you're going to sell, what are they going to look at when they're looking for a company? And this is whether it's a strategic buyer or a financial buyer. There's kind of a high-level checklist for the things they're going to look for. So, one, a strategic plan that's outlining your roadmap for future growth. Competitive advantages. So what differentiates your company from another company? Is it the market they're in? Are they serving a particular region? Is there a product that they are best at making? Those are some things that they could be looking for. Profitability. So not just is the company profitable, but is profitability increasing? Is it sustained? Low risk profile. So if you're looking to increase the value of your business, they are going to be, the buyer is going to be looking for certainty. They're going to be looking to reduce risk. So if you can lower your risk profile, that's going to increase your value. Consistent revenue streams and cash flows. So that is, do you have contracts that are pending? Getting those solidified. They may value your business based on the cash flow stream. So having those consistent cash flows is going to improve valuation. A strong management team. So this they're looking for, hey, when we want to make sure that the success this company has is sustained going forward. So is there a strong management team in place to help with that? Established documents and processes. That's just, again, looking at, are there things that are repeatable? Is what the company is doing successful today set up in a repeatable way to make it to continue to be successful in the future? And then clean and organized financials. And so we showed the potential strategies first to show here are strategies you can use to help grow your business. We then looked at, okay, here are what buyers are looking for. So the next couple slides, I want to take a look at, okay, to help improve your company's checklist and what these buyers are looking for. How can you implement these strategies over time to make the company more valuable in the future? All right, so next slide. So first, one of the items on the checklist was a strategic plan. And so this, what the buyers are looking for, they want to understand that you have a plan in place for going forward and how to grow going forward. And some important elements of that strategic plan. So it's going to be a vision and mission. So this is going to align both your internal as well as your external stakeholders on what you want to achieve and how you're going to achieve it. You need short and long-term goals and objectives. So these aren't just goals and objectives that are out there. They need to be defined, they need to be measurable, they need to be specific, and they also need to align back to that vision and mission that you had set. Strategic initiatives and action plans. So this is, okay, how are we going to achieve those goals and objectives that we set? Maybe the goal is to grow revenue or to increase profitability. This is going to lay out how you're going to do that. It's going to assign responsibility and also put timing to it. And finally, key performance indicators. So these are metrics that are going to allow you to track your progress toward the short-term goals and long-term goals and objectives. So why is this important? We talked earlier about maximizing value, increasing certainty if I'm a buyer of what I'm getting. If you lay this plan out for them, it makes their job much easier when they're coming in to understand here's what they've done, not only what they've done in the past, but here's what the company is looking to do in the future. And if you can provide some of that certainty and confidence in what you're looking to do, it's going to make that buyer's job easier, give them more confidence, and ultimately probably increase the value that they're willing to pay for the company. Right, next slide. So another area, profitability that they're looking for. So what are some strategies you could implement to increase your profitability? Well, maybe entering a new end market. So maybe you are working in a market today, maybe it's automotive, and maybe looking at something that has a little bit higher growth or higher profitability, maybe something like medical. Now, you could do this organically. That would be using your current equipment, customer relationships, to start to grow in another market with what you have. Or if you don't have the capabilities to do it, that's where an M&A play may come in. You can acquire somebody who's already serving that market. Process efficiencies are another way to increase profitability. So maybe in your manufacturing operations, you improve the throughput, reduce cost, and improve your margins. That way, it'll increase the profitability that the buyer would see. And there's also a product expansion or divestiture. So really, this is, you may have a set of products that you bring to market today, but doing an assessment on those to see which ones actually are high revenue, but also high profit. And you can see that chart in the bottom right. So what that chart helps people do is you lay out your products. And if you go to the right, that is high revenue products. And if you go up, that's the profitability of the products. And really where you want to focus your products are on that top right quadrant. That's your high revenue, high profit. If you start seeing products that fall into the bottom left, where it's low revenue, low profitability, there may be reasons to keep them around, but it may actually benefit to get out of those products and focus more on the ones in the top right. And that can improve the overall profitability and help increase the value of your company. Next. And so the last one I wanted to hit on is lowering the risk profile. So strategies to help you lower that risk profile. One could be market diversification. So if today you're only serving one market, let's say automotive, for example, and it's very cyclical, entering into a couple different markets and even markets that are uncorrelated. So maybe if you're in automotive, something like defense, where they don't move up and down at the same time, that can be attractive. It helps with consistency of revenues, and that can lower the risk profile to your potential buyer. Product or service expansion. So just like markets, if you're only making one product today, you could reduce the dependency of that single product by getting into more products and reducing that concentration. Customer diversification. So taking a look at the customers you're serving and really trying to target that no customer accounts for more than 20% of the total revenue. That way, if for some reason you were to lose a particular customer, you still do have a lot of revenue and profitability coming from other customers that you have, and you're not so concentrated or dependent on a single customer. And finally, supply chain assessment. So ensuring some of your critical supplies are not single sourced. I mean, we can think of a lot of examples in the news today, the automotive chip shortage being one of them, where due to these supply chain issues and concentration risk, companies are getting in a lot of trouble. So if you implement some of these strategies, it's a way to lower the risk profile. Again, increase the value of your company. So when it comes time to sell, you check more items off on that checklist. And so that summarizes, there is going to be a further presentation in a couple weeks about strategies, and not just for strategies if you're looking to sell, but also you can implement these strategies even if you're not looking to sell to help grow your business. And we'll talk a little bit more about that next week. But this should give you a good framework to work with and to start to think about if you're thinking about selling in the future.
Thank you, Dan. I have one question here on what is a question is really what does the process look like to undertake a strategy? Is it I'm just kind of interpreting the question here. Is it really is it a 2-month, 4-month, 6-month, or how long does it take to build something like this?
Sure. Well, first, I'd say there's kind of two parts to that. The first thing, it depends on where you as a company are at, even in your strategy development process. It is not uncommon, as we work with clients, that there really isn't any sort of strategy in place. So the first step may be, let's have a strategic planning workshop. Let's have a strategic opportunity session where we sit down and we go through what the company does well, maybe what it's looking to do in the future, and we help to build out some of those strategic initiatives. That could be a 1 to multi-day session that we do just to start to figure out the plan. The next step, if you've already have some of that in place, or we do that together, is probably a month-long or so, a couple weeks to a month-long engagement where we do some research and analysis to help set that strategy. So my background is I'm an undergraduate engineer and a finance MBA, so I like to use data to help drive decisions. So as we're looking at, and you're talking about a new strategy, say entering a new market, we want to do some research and analysis around other markets. Back to the metal forming example I used earlier. If you're in auto and looking to get into aerospace or appliance, we want to take a look at those markets, see the size, see the growth, see the trends, what's the opportunities, to help you then with data look at what those markets are looking like, and then that'll help you make the strategic decision with confidence that you're looking to make. So yeah, typically that's going to be a couple week to a month long project to help get to those answers.
Perfect. Well, thank you, Dan. And I know at the end, I know we have a strategy session coming up June 3rd, which we'll have on the last slide. That we'll have more of information on strategy for your business. Next up, we have Ben Hartman. Ben is, again, a vice president of our corporate finance team, and Ben is really busy. We were able to pull him off out for a few minutes here to give us some insight. Is now the right time to exit my business? There's, as we talked about in the beginning, there's so many questions, and there's so much uncertainty. So how do I go about that? So Ben, I'm going to turn over to, this is really the multi-million-dollar question for you.
Thank you, Tom. Nice to meet everyone today, and appreciate you taking the time to join the webinar, and looking forward to walking through these strategies for you. My name is Ben Hartman. I'm a vice president in UHY's Corporate Finance Group, where we focus on assisting and supporting and leading business owners through a transaction. Next slide. So when is the right time to sell your business? Ultimately, it's a personal decision, but working with your advisors, we can help to position you and your company to help maximize proceeds, and also create an efficient process to ultimately sell your business. Some of the key characteristics that you want to see within your company before you ultimately pull the trigger on selling is, number one, you want to be able to demonstrate a track record of successful growth and profitability. A lot of groups look at the last 3 to 5 years as trends in evaluating that. Secondly, buyers also want to understand, is there evidence, and can we support, future growth over the next couple of years, whether those are growth opportunities that, whether you're expanding new products, new product lines, new customers, new geographies, but they want to be able to grow the business in the future. And lastly, our market conditions, not only how your industry is performing, are there nice tailwinds supporting a lot of the growth initiatives that you've outlined and supported, but also what's the M&A market doing? In the last 10 years or so now, 5-10 years, the M&A market has been very strong. Not only the volume of transactions, cross-border deals, private equity, public corporations acquiring businesses. We've had a nice, robust year. The last 12, 15 months or so with COVID, there's been a slight dip. We saw in Q2 and Q3, but it's rebounded very nicely, as you can see in the bottom right-hand chart there. And Q4 came back strong, Q1 as well, and we expect the rest of 2021 to continue in that manner. A lot of what's driving that activity is the Biden administration proposed tax plan, as well as the pandemic, and business owners are starting to evaluate, is now the right time. Additionally, public companies, corporations, and private equity financial buyers are sitting on a lot of cash or dry powder that needs to be invested. So they're putting that money to work and growing their business. A lot of what Dan talked about earlier, those strategies, they're working on implementing in their own businesses. Next slide. So how are taxes going to impact a transaction? You know, we're hearing a lot about taxes today. You know, Biden has proposed a number of changes to the tax law. We're not going to focus on all of those today, but one key component, the biggest change in terms of a transaction, is the change in the rates. So today, if you sell your business, it's going to be taxed at, you know, long-term capital gain rates. But, you know, as Tom mentioned, that multi-million-dollar question, we're looking at transactions north of that $1 million threshold. And so rather than a 20% long-term capital gains rate, it's going to be paid more at the 40% threshold. And so as we look and understand that, we've kind of put a waterfall together in the bottom right, highlighting a $100 million transaction and what that proposed change and how that affects your in-pocket transaction proceeds. Because we're not only focused on driving a higher transaction value, but maximizing those in-pocket proceeds that you get to walk away with. So in the scenario below, you know, based on a stock deal, under the new proposed law, there would be 17.6 million of reduced proceeds due to higher taxes. That doesn't mean we need to go out and find 17.6 million more of value. That actually equates to $31.5 million in a stock sale, roughly 30% more in proceeds. So that is a substantial dollar amount out there. So that's a lot of what we're seeing today and why business owners are wanting to exit here in 2021 rather than waiting a few years. Next slide. So what does the process look like? You know, every transaction we work on, we're structuring it to meet our clients' objectives and goals. So we sit down with them and just discuss, you know, what are your top priorities? What are you looking for in a buyer, in a partner? What type of transaction are you looking at? You know, there are three key areas we focus on in determining how we structure that process. The first one is confidentiality. The second is duration. And then the third one is value maximization. And we like to understand, you know, which of those core three areas are most important to you. And so based on those discussions, we have a few different options. One is called the rifle shot approach, where we go out to a very select group of buyers, and that is typically the confidentiality risk is the lowest, the duration is the quickest, but the value maximization is also can be the lowest because we're going to a limited number of buyers there. There's typically, you know, 1, 2, 3, a handful of groups we're talking to. The next one is a targeted sale, and the targeted sale is the most commonly used and the one we work with business owners on the most. This is where we identify a number of buyers, strategic and financial. The confidentiality risk is kind of moderate compared to the rifle shot because we're going out to a larger group of buyers. The duration is longer as well. We're talking to more groups, so it takes more time. There's more steps to the process. And then, but this is also where we're also maximizing value because we're talking to more groups. We're uncovering groups that you may not be aware of that will be interested in buying your business. The third is a broad auction. This is one we use very rarely, if at all. And this is where we're actually announcing it publicly. We're taking out an ad in Cranes or the local newspaper and saying company XYZ is for sale. That's the confidentiality is the lowest here. Everyone's going to know you're for sale. The duration is the longest because we're waiting for groups to come forward. But this is where you're going to maximize your value. We're going to know, like, we're going to uncover everything and who's willing to pay the most. Next slide. So what are your options? So there's different types of buyers, and there's also different types of transactions. If we think about the buyer universe, we put them in two buckets. There's strategic buyers and there's financial buyers. Strategic buyers are corporations that are probably in a similar line of business as you today. Their goal is to improve operations by pursuing vertical or horizontal opportunities by acquiring businesses and bolting them onto their current operations. Historically, but not always, these groups are the ones offering the highest valuations, primarily because they can find synergies, whether they're revenue or cost synergies. And they're also going to acquire 100% of your business. So there's no future commitment from sellers. The second group of buyers are financial buyers. Think private equity funds, family offices, hedge funds. These groups are raising outside capital from investors to acquire businesses to grow and ultimately sell after a period of time and generate a return for their investors. These groups are typically industry agnostic. They're targeting a certain size company. They want to partner with and rely on the existing management team to grow and operate the business. These folks are not going to come in and run the day-to-day operations. They are just there for support, advisory, and ultimately in 5 to 7 years, they're going to want to exit. Also, as part of financial buyers, they're going to require some sort of reinvestment. So they're not acquiring 100% of the business. They may be acquiring 80% of the business. So there's still chips left on the table. So what types of transactions are out there? Well, there's stock repurchases and recapitalizations where maybe they're doing a leveraged dividend. This is where you're working with your senior lender or maybe a junior capital provider and just financing a dividend to the owners. The second is a shareholder recapitalization where you're buying out one of 5 owners in the business because they're ready to transition out. The third is the actual full liquidity event. So this is where we're working with financial buyers and strategic buyers, and maybe it's a partial sale or you want to find a partner for growth because you're serving a certain market and you need to bring on a partner to help fuel that growth capital because where you are in your life and succession planning, it doesn't make sense for you to pour millions more dollars into the business to grow. And this is where financial buyers can be helpful. They can provide the capital and you just provide the resources to actually execute on that growth. And then the last one is the 100% sale or the strategic sale. This is where you're cashing out all your chips, throwing the keys behind you and moving on into retirement. And a strategic buyer is going to operate the business going forward. Next slide. So what is enterprise value or transaction value? How are these companies determining a valuation for your business? Well, simply put, enterprise value is your stock value plus your debt. Stock value, think of it as the market cap of public companies. When you're going out and buying Google stock, you're purchasing a little bit of their equity. When you look at a private company, well, you're not trading your equity value actively on the market. It's private, nobody knows. So what we look at is your EBITDA, and we apply a multiple to your EBITDA. EBITDA is your earnings before interest, taxes, depreciation, and amortization. We also look at capturing certain types of EBITDA adjustments that are for expenses that are non-recurring to enhance EBITDA, to enhance the value of your business. There are certain variables to manage the business to drive up enterprise value and equity value as identified below. Like debt, you want to reduce debt, which is going to increase your equity value. For EBITDA, you want to enhance the sustainable EBITDA. What's recurring in the future? Low cost production, economies of scale, SG&A control, revenue growth are just some items. The multiple, what's going to drive a higher multiple? Growth prospects, diversification, trends, mitigating risk, a lot of things that Dan is willing to work with you on the strategy side. Next slide, please. So how can UHY help you determine your enterprise value? Well, there are a number of methodologies we use to determine those. On the bottom right-hand side of the slide, you'll see there's a football field, or what we call a football field, a horizontal bar chart. We look at 4 different types of analyses. One is precedent transaction analysis, which is where we're looking at similar companies in your industry that have transacted historically, and what types of multiples, what types of buyers are acquiring those businesses, and kind of looking at the range of value there, what range of multiple, how big were those companies, and determining a set from there. We're also looking at the public company markets and companies of similar lines of business to you, and looking at what they're trading at today and historically and in the future, and using those multiples to also set the goalposts here. The last 2 are more based on your financial projections and more theoretical. A discounted cash flow, which is where we're projecting out future cash flows and discounting them today and summing those up and coming up with an enterprise value. The last one is a leverage buyout analysis. And this is an analysis that private equity groups or financial buyers do in their analysis to support the valuations. They're looking at what we're paying today and what we expect to exit at in the future, and using that to develop a valuation as well. So, but also what goes into determining those enterprise values. There's strategic considerations, there's operational considerations, and there's financial considerations. Key things to drive those multiples up is, your diverse revenue streams, your customer mix, your product mix. Are you a market leader in your industry? Do you have a differentiated value proposition as compared to your competitors? Do you have a strategy to grow? Does the management team know that? Operational side, what's the labor environment like? Are you union? Are you non-union? Is there any type of engineering or technology to the products you're selling? Are you continually developing new products? How strong is your management team? Quality, your information facility systems speak to the sophistication of the business. What about your facility locations? Things like that. And then on the financial side, like we spoke about, those historical trends, the cost structure, the margins of your business, the CapEx. We want to understand how much free cash flow of the business there is available to the shareholders. This is an analysis that UHY goes through a lot with our clients, and we work with them on determining these factors and presenting an analysis similar to what you see on the right-hand side, so you understand what your business is worth today.
Sorry, just chime in there, Ben, on, this is a very important process. It's what we call our kind of indication of value. And it kind of sets the foundation of, you thought it was worth one thing, but the reality is maybe it's worth another. And, how do we, get that increased multiple? And this gives you, it's a pretty low cost solution to give you a good baseline value of, what the business is worth.
Thanks, Tom.
Next slide. Yep.
So how do we maximize value through a process? One, we want to create a competitive environment in a controlled and structured solution. We want to capture value, we want to manage the variables, and we also want to manage the process. In capturing the value, we want to identify, communicate, and support, the company's value drivers. Think about, the last 10, 20, 50 years that you've been developing your business, growing it. What are those key attributes that make it sustainable? Why customers keep coming back to you day in and day out? We want to create competition, amongst a select number of potential buyers. That competition drives value. Conveying the company's value to potential buyers organization. We want to manage that message too there. And then most importantly too, not only do we drive higher valuations, but we also want to focus on maximizing your in-pocket dollars. How do we manage the variables? This goes back to your EBITDA. We want to enhance your earnings. We want to identify and normalize your results for any types of expenses that, a new buyer wouldn't incur going forward. Think about, shareholder salaries, any types of perks running through the business, any trips, things like that. And we want to optimize your deal structure. All cash versus seller rollover versus seller notes versus earnouts. We want to make sure that we're getting you the best deal. One, by demonstrating that competition, we can go out there and get you the best deal structure so that you're cashing out almost 100% of the deal, reducing your indemnity obligations while also reducing taxes. And lastly, managing the process. We create that competitive tension via our materials and setting strict deadlines for buyers to hit if they want to stay in the process. This helps mitigate risk. And you also control the information flow so everybody understands the business at the same level from a positive standpoint and any negative news that come up through a process. And we want to be flexible in managing those messages. And then, to help support valuations, we want to highlight, any cost and revenue synergies. And then lastly, one of the most important factors is maintaining confidentiality. Every sale process is code named with a project name so that we're not going out with company XYZ is for sale. It's Project Delta, so that we're limiting the risk there and maintaining confidentiality. Next slide. Well, again, we really appreciate everyone joining today. UHY Corporate Finance, UHY, we are advisory leaders to middle market companies. Here are just some examples of the manufacturing and distribution deals we've done in recent years, and we continually be recognized by some of our, the M&A advisor, ACG Detroit, Cranes for awards for our deals and the professionals on our team. So if you have any further questions about what you think M&A looks like for you or what kind of strategy you want to do, please feel free to reach out to any of us.
Yeah, thank you. I wish we could be in person, and I'm sure we will very shortly to present. It's just a little more interactive with having our audience in front of us. But again, we want to thank you. I do have, Ben, a couple questions. I think looks like they're geared towards you. I could probably chime in. One is with the change in the Biden administration, when taxes going up, does that ultimately mean a decline in multiples to buyers? Are they going to pay less because there's less dollars, right?
It's definitely a consideration. I think one of the things we're seeing out there is there's still a lot of dry powder and a lot of capital. And if taxes are going up, maybe there's less sellers out there too. So, just creating that competition and driving value is going to help keep multiples up there in the future, even though taxes are expected to increase.
Yeah, I would agree. Don't let the tail wag the dog and try to rush into something because of taxes. It would be my, our advice. And then, with the change in technology and electrification, as an auto company, do you see that's kind of maybe for Dan and Ben here, is there a lot of risk, given EV technology? I know that we talked about there's going to be winners and losers, but, is that really, is there less buyers for auto companies or more buyers because of, EV technology changing?
Dan, do you want to take first from a strategy perspective?
Well, yeah, absolutely. So from a strategy perspective, it's absolutely a risk, and something that if you are in the space right now and you make products that are not a part of electric vehicles or things coming in the future, yes, we're looking at that coming out in 5 to 10 years really being a massive market play. But the time to get involved in that is right now. As you know, if you're in auto, the cycle to get on a program might be 3 to 4 to 5 years. So even though we're talking about, hey, electrification might be 20% of production in 2030. Well, 2030 is really just 1 or 2 vehicles away. So if you do not have a strategy around how you're going to transition into the electric vehicle space now, you need to start to do that immediately. And what we're seeing, I think back to some of the original question is the types of buyers. So there is still buyers in the market because there are, even if you are making certain components, you have relationships, you have skill sets, there still are qualities you can bring to help in certain electrification phases. But we may have some new buyers with new motives who weren't in automotive before or are looking to get into automotive or get some expertise. So there definitely still is a lot out there. I think also on some of the non-electric vehicle things, you're going to start to see consolidation. So people who are in certain powertrain aspects that are not electrical, you're going to see those industries consolidate a bit, and that's how some of them will survive as long as they can. But there is definitely still opportunity. There's just some different buyers and some consolidation that's occurring around some of those technologies.
Yeah, for sure. I mean, we see it. I mean, engineering, design, development, low volume production, even prototype to extent is, growing pretty rapidly when you think of, all these new vehicle launches that are coming up on the EV side. It's pretty exciting. So there's lots of options. There's lots of ways to plan. We hope today provided you, a key takeaway we think is begin to build that advisory coaching team around you to really build a long-term solution for you, your family. So again, we want to thank you. We finished pretty much almost right on time. Again, reach out to us with any questions. We will try to get the presentation out to everybody also. All right. Thank you. Have a great day.
Thank you, everyone.
Thank you.